Good morning and welcome to Bazaar Morning Call. I'm Anuj, with me, Sonia, and Prashant is back, of course. We had a very strong day yesterday. I'm saying that because the market from the gap down really rallied big, and the Nifty held out 20-day moving exponential moving average, ended at the highs yesterday. Something which we had said as well when we started the show yesterday, that was possible because there's clearly some signs of decoupling which you are seeing now, and of course crude's decline remains a big positive for India. It has declined on margin even more at 88.6. The dollar index has retreated, so that's a positive. Not that, at 110.5, it anyway was acting as negative for the market. SGX Nifty is indicating that for those who bought yesterday, this is going to be a nice ride today, 120 points higher for starters. Guys, good morning.
Morning, guys.
Hi, morning, Prashant. You don't sound that good, but hopefully you'll get better through the course of the day. Morning, Anuj. As you said, there's a rebound rally across the globe, and I guess that's something that the street will take with both hands. After 4 days, after 7 days, the Nasdaq has ended its losing streak, and the Dow as well in the green. All eyes will be on the global data that comes through. There's the US jobless claims data that comes through later today. Economists are expecting the jobless claims to go up slightly to 235,000 versus 232,000 last week. But this will be one of the last few data points before the US Fed meeting that takes place on the 20th or 21st of September. In that context, we've been telling you repeatedly that there's a 50 to 75 basis points rate hike that's expected from the US Fed, and markets are a bit cautious ahead of that. For our own markets, though, buying has continued. FIs bought about 750 crores. DIIs sold a bit, but nothing alarming. And this 20-day moving average, this is the level that everyone's been talking about ad nauseum, 17,630. The market has held on to it for now, Anuj, but it has tested it, a couple of times. What does that say about the texture of this market? Has it become a bit fragile, or do you think that it's just buying time before the next leg upwards?
Sonia, look at the market yesterday, and yesterday I was making this point. Just simply buy. That's the good risk-reward trade, and the SGX Nifty low as stop loss, and that trade would work. Time to buy was yesterday, and look, this is the market in which you will have to buy when things look ugly, because the market is forgiving. 2 or 3 days later, the market moves back. I know this clear momentum right now in the market, and every time this level is holding out. The level that I'm watching out for is the 20-day exponential moving average, 17,485. Yesterday's low was 17,485. This level is rising, of course. So yesterday's 20-day was 17,475, but now it's 17,485. That's given you a beautiful line in sand. The big risk in this market is actually booking out too soon, because yesterday, if you would have bought, by the end there would have been temptation to book, but the real reward would be made today morning with the gap up. So this is a market in which you're clearly ignoring what's happening globally. Global weakness is being ignored, and the best evidence of that is we fall less on days when the market is down, when global market is down, and we rise more when global market is doing well. And you've seen, 15 days, 20 days maybe is not the best indicator. You've seen year to date the kind of outperformance that we've seen for our market. I think, but for today, you want to see the first hour high and low, because today's Thursday, weekly options expiry day. There's still shorts in the system. Can we have a trend day? I think for that to happen, you will need to see if the first hour high is taken out in the second hour. If that is done, then I think a trend day is possible. And the reason I say that is FI short positions are still very high, 81.5% shorts for FIIs. I think real short covering will happen if the Nifty crosses 17,800. Once again, just to reiterate, if you're a near-term trader at 17,800, you may want to book a bit, because that's what the market's done. At 17,800 it retreats, at 17,400 it rises again. But if 17,800 is taken out on closing basis, then I think the real short covering, which perhaps takes market closer to all-time high, that will start. So you may want to wait for that. The Bank Nifty is going to be interesting to watch out for, because it's something which has very strong momentum. It's not even breaking its 5 and 10-day exponential moving average. Forget about the 20-day. So that remains your strongest index despite yesterday's underperformance. And domestic stocks, I think, is still the way to go. Yesterday, you saw how a lot of these economy-facing stocks like cement, for example, were doing well. Mid-caps are outperforming, and I think that perhaps should continue. Prashant, how are you now?
Better, and I plan to look on the. I was telling Sonia, I was half jokingly, but only half jokingly. I'm going to look that side and not send germs your way.
I think the damage is done, whatever had to be done by now.
I am better, guys, so thank you. All right, the big positive for markets is the drop in oil prices. I think that is absolutely front and center, the big one for India. And oil prices have come off meaningfully now. The Brent is under 90. But for the purpose of where oil may head, I'm going to look at WTI because the charts are a little bit more cleaner. I mean, it's not going to happen that WTI goes one way, Brent goes the other. So WTI prices closed below the $85.41 mark. What is that? That is basically a former resistance and now a support. It's also, by the way, $85.41 is also the highest point of 2021. It broke through and ended below that. We need to see a weekly close. That is, tomorrow, if prices stay under this level, if it does close below this level, then we could see a slide into the 60s zone. It sounds dramatic, but that's what charts suggest. There was, by the way, a double top. This level got taken out. And the target for double tops gets us all the way deep into the 60s zone. So, that's going to be huge, right? For a big oil importer like India. Will it pan out like that? I don't know. Many market watchers, oil market watchers, still believe that there is a big difference between paper markets, which is financial markets, and, physical markets. And prices, paper markets need to adjust higher, not lower. But I think at this point in time, what the weakness suggests is the broader macroeconomic environment, which is global growth slowing much faster. China, for example, has most likely extended lockdowns for the Chengdu region, which is a very large industrial hub for many more days. Things like that. There's China, but of course, slowdown in the US, Europe, etc. as well. So oil is, I think, front and center. There was no meaningful change in, rate hike expectations at all. So a couple of things. The Wall Street Journal's sort of chief economics reporter, who's known as the Fed whisperer. He's perhaps close to the workings of the Fed and kind of gives us an indication of the market in terms of what's going to happen, suggested that a 75 basis point hike was the most likely move for the Fed in September, 21st of September. We had, a Fed official make a speech who did not push back at all. Brainard basically spoke and she said, we will hike rates, and I quote, as long as it takes to get inflation lower. But, rates moved sharply down. They went up 16 basis points day before yesterday, and overnight they gave some of that back. It's a bit of a puzzling kind of move, but that's basically what we saw. Later today, we'll hear from Fed Chair Powell as well. Will he say something different as compared to what we heard from him at Jackson Hole, which was that 7-8 minute speech in which he was very, very clear? It's unlikely he'll say something very different. He'd want to stay on the point. But that's later. And of course, tomorrow we have the EU energy ministers who will meet to decide in terms of what needs to be done with regards to energy security, or energy insecurity, rather, I should say, in Europe. And that may have implications broadly on the entire energy complex, not just gas, but oil prices as well. Here in India, I think the market axiom, which perfectly fits what's going on, is, don't fight the tape. You may feel that the market's done too much, that it perhaps is not paying too much attention to global cues. You've got an option. You can sit out, but don't try and take a counter view, or at least act on it. Not with this kind of momentum. The dips are being bought and the market has been continuing to push higher. Sonia.
Oh, absolutely. And crude, the way it's falling, now Brent